All right, let's try this a second time. Silly, me and Dylan both were hooked up to our Bluetooth. So here, we'll wait for Dylan to come on here, and then we'll start this whole live Q&A. But there's some great topics we're going to talk about. Is exactly, what are making people a little scared, and kind of what the market's doing right now, and have interest rates actually gone up or have they lowered? So let's get Dylan in here and let's see if this all works out. All right, I'm adding him. All right.
All right.
Can you hear me?
Hey, yeah, it works. Okay.
Bunch of rookies on this live video here.
Yeah, my Bluetooth was on. I think it was hooked up to my car because I'm close enough to my car that it probably just hooked up there. So we're good now. I can hear you.
All right, this is good. Hey, man, so how you been?
Good. Yeah, so I heard your little intro there. That's awesome. Thank you so much. When you told me about this, I thought it was really cool. I've seen a lot of videos on first-time home buyers or buying investment properties, things very specific to a certain buyer type. But I think misconceptions of mortgages, I think that's awesome. I think that applies to everyone, every type of buyer. And there are a lot of misconceptions. So I think we got, a lot of great things to talk about.
Yeah, I know exactly. So let's, first of all, I don't think since our last hiccup here a few minutes ago, I was telling people so you're a lender with Umpqua Bank, and I know you've been in the industry for quite some time. And I've actually used you. I'm recently closing on my house. And so not only are you a personal friend, but also a great great lender who I'm using as financing through my house. So give us a little bit of background on, where you came from and what got you into lending with Umpqua.
Yep. Yeah. So I've been a Bellingham resident for a long time. Went to high school here. Also went to college up at Western. I worked at another financial institution for about 5 to 6 years while I was going to college. Finished up grad school and made the jump over to Umpqua Bank about 2.5 years ago. Just really got along, with the team over here and the staff. And, it's really important to like who you work with. And we just got along really well. And yeah, I've loved it ever since. So
right. And I know Umpqua's a little bit newer bank, a couple years to Bellingham, but they're originally out of Seattle, or where are they from?
Oregon. Yep. So we're headquartered in Portland, but we're based out of Rosenberg.
Okay, cool. So let's get into this because I know there's a lot of misconceptions about getting a loan. And so let's start off with, so last year alone in 2017, and I think one of the big misconceptions is everybody thinks that you need to have 20% down. So how many loans did you do last year in 2017?
Yeah, so I closed about 60 sides last year, which equated to about 16 million in loan production. So yeah, it was a great year. Doubled from the previous year from 2016. So it was awesome. Really happy with that. But yeah, you touched on a great point. A big misconception is that you need 20% down to purchase a home, which is just absolutely not true. Yeah. So, and when you asked me this question, I looked up some stats because I was actually interested. I'm like, well, yeah, I haven't looked up how many people actually put 20% down. So of those 60 transactions, 14 of my clients put 20% down. So that's about 23%. Yep, about 23%. Put 20% down.
Just there, so 14 out of 60 sides. Now, I'm assuming you're probably going to do more this year, but 14 people out of 60 only put 20% down. And I think a lot of people get scared of trying to buy a home because I think statistically, I think majority of people put down between 3 to 6% on an average of a home loan. And so talk to us on the people that don't have 20% down because, I didn't have 20% down when I bought my house. I did 5% down. So what are you seeing a lot of people, regardless if it's 0% down or how do you think people are putting down?
So what was interesting is when I looked up that stat, because you'd asked me this question yesterday, is I actually thought that was pretty high, the 23%. I thought it was actually going to be lower for, my clients that put 20% down. So I kind of broke it down and I looked at it and I said, well, how many of those people were first-time home buyers versus, your move-up buyers? Let's say they're contingent, they made a contingent sale, so they sold their home and bought a new one, or they had previously owned real estate, had a chunk of change, and then bought, a new house. Only two of those 14 that put 20% down were first-time home buyers, and both of them got gifted that money from a relative. So the other 12 were either investors, that were buying an investment property,
Right.
or they were move up buyers where they were contingent, they sold their home and then we're buying another one. So that's the biggest aha moment for me, is that there was really only 2 first-time home buyers, and those 2 also got gifted the money from relatives. So they didn't even save up, this big chunk of change, their $80,000 or whatever it is for their 20% down, and put that down. So I thought that was the biggest aha moment.
You know what? It's crazy because right now, when people think of 20%, I think some people also don't know the average home, and I'm talking Bellingham here, the average house that is for sale right now in Bellingham is, I believe last time I looked, their average home sold, is about $375. So if you put 200,000, let's say 400 grand, that's $80,000 on top of some of your closing costs. So, it's pretty crazy to see that. It's nice to see that people aren't putting 20% down, because that's just the very, very minimum of people.
Yep.
So I guess let's rewind it a little bit here. And so let's go. What do you think why are people a little bit, you think, from your experiences from 60 sides last year, have some people obviously were opening up to you and say, hey, Dilly, I was actually a little scared to come in and talk to you because so-and-so.
Yep.
Or what were some of the reasons that you found out from those 60 sides?
Yeah, I think, really mortgage, it's funny. It's not very transparent. It's very, we kind of get this perception that bankers are, going to sit at this really tall desk and you're going to be way down below, and they're going to tell you, no, you don't qualify. You're not approved. And they won't give you any reason or justification for why you're not approved. So I think that's the biggest reason, is people don't know what their credit is. They know how much they're making, but they don't know how we calculate that. They're afraid that they don't have a down payment, which we just touched on. But those are the big things, is that a lot of bankers, what they just they don't give you a reason. They say, no, you're not approved, and leave it at that. So I really try to structure it where, if it's a no, it's a no right now, but here's where we need to get, and kind of break that down. Here's where your income is. Here's where your credit is. Here's where your assets are. Here's where they need to be. Let's put a roadmap in place to get you there. And then they can really see that end goal, and they're more likely to actually reach it than if you just tell them, no, you're not approved. Sorry. Good luck.
Because there was probably 60 sides out of last year. You probably dealt with a few that, let's say they met up with you in January and actually bought later in November, December, right?
Yep. Yeah. So, I've had clients that, had bad credit, which, if your FICO score is under 620, we don't have a mortgage product for you. I've had clients that are under that 620, and, we've worked on their credit. That's a big thing, is people don't know what goes into their FICO score. So I think really breaking that down, I actually have the percentages here. So 35% is payment history, 30% is amounts owed, so balances on credit cards, 15% is length of history, 10% is new credit, and 10% is types of credit used. I also bolded the 30% of amounts owed, because that's the biggest.
That's the big one.
That's the big one that I see, where people don't have optimal credit scores, but they have no late payments. They have nothing. And, I pull their credit and I'm like, that's odd. They have a 690 credit score. Why aren't they top tier, top 700s? And the reason is because, maybe they have a $500 credit card and they're always maxing it out. The general rule of thumb is you want to keep that under 50 or 30% of your total balance. So really the big solution there is get your credit limit to $1,000 or $2,000 and only use that $500. Right.
And I think I see, I've seen a lot of people too, especially with, I want to say, between the ages of 25 and 35, the economy is doing really good, and people are, the wages are going up a little bit here in Bellingham. And of course we have a lot of car dealerships here in Bellingham. And there's some great cars out there right now. It's 2018. Everybody makes a great car, and everybody
buy your car after your house.
It's crazy, because what does a $300 to $400 payment really? If I had a $400 car payment right now, how much less of a house would I be able to be qualified for? What do you think?
Right. Well, so and I might actually pivot this to my website, because I just actually wrote a blog post on debt to income ratio, which is exactly what you're touching on. It's funny, I was actually writing the blog post last night and was thinking, man, most people don't understand, this very simple equation that all mortgage bankers use to qualify their clients to buy a home, right? People don't know how to calculate their income. People don't know how to calculate, what debt's going to be factored in to, the debt to income ratio. So I have a good blog post. We can post that in the comments for people.
Everything will be...
I break down the exact formula of debt to income ratio. You can kind of plug and play on that and see how much you would be able to afford for a monthly mortgage payment.
Right. And I'll make sure to link everything to his website, all his contact information, and the same as mine. I just wanted to give a hello out there to Sean. I know you're, I think, South Dakota. Tori and Valerie, good to see you guys. Lorraine, Becky Taylor's on here watching. So I just want to say hi to all you guys. So let's talk into, and obviously that's what you're there for, is when they come and they don't know how to do anything. I think a lot of people try to put everything on themselves to try to figure it out, because the internet is such a powerful tool that they just...
And a harmful one at times.
and definitely a harmful one, because some information may be very broad in the aspect of, the country, not Washington nor Whatcom County. So I think that's where you and I take a big play in our local market. So I just want to welcome Andy. Andy, good to see you again here, buddy. Went to high school with him, great chef. So cooked some good food. Let's get into, I know we're talking about credit score, and a lot of people, like you mentioned, the minimum requirements, because I think also people, are still hovering. I think people have this misconception, like if you have a 650, 675 credit score, you're just okay and it's not very good. But in reality, what's the lowest credit score you can have with, good debt income ratios that you can get a loan?
Yeah, so the minimum FICO score is going to be 620. Obviously, credit score is the biggest determinant of, the loan program I can put you in, the interest rate I can, get you, mortgage insurance rates. I mean, it's huge. I won't get into the specifics because there's a ton of disclosures and things like that we would have to go through. But it's a huge factor. But yeah, 620, just to keep it, very basic. That's the minimum FICO score that we need to see. And, I think you were kind of alluding to also the process of getting pre-approved earlier is, a lot of people don't know what their credit is or their income or things like that. And that's where, we can help. But really, the best process for that is, when I'm talking to a potential buyer, it's really, hey, we'll chat over the phone, but it's getting an online application. They're going to fill out all the pertinent information for income, credit, and assets. I'm going to take a look at it, analyze it, chat with them. Hey, I have a few questions here. Then I'm taking the step to meeting with them in person. I have a buyer packet that explains, what we were just talking about, debt to income ratio. Really the why. Why are you approved for this amount and not this amount? So that when they're jumping in your car, they understand, hey, Aldo, we don't want to see any houses over $300,000 because we want our payment to be X. And I think that's a really crucial part, is meeting with that client in person. And it doesn't need to be a first-time home buyer. I meet with fifth-time home buyers in person and go over this buyer packet just to explain to them, here's where the debt to income ratios are now, because they change all the time.
Absolutely.
So it's important, if you're a first-time or a fifth-time home buyer, really to just understand that why, so that I'm not just telling you, no, you can't afford that $400,000 house. It's no, here's why. Here's what we can change to get you there. So I think that's a big crucial piece.
And a lot of people, they'll get, let's say, just throw out a random number. Some people will get pre-approved for $300,000, but it's nice to come and sit down with you in person, because they don't see that whatever that $300,000 payment's going to be, but in reality, they want a $250,000 payment. Right. So everyone sees that big number, but in one of my videos I talked about, it's just more than just a mortgage, amount. $250 compared to $300,000 mortgage is going to be, a big difference in, I think, a lot of people's lives. So, I think a lot of people, when they're getting into the process, like, oh man, the bank just requires so many loans. They need this, this, and this. I think you brought up a great point this morning is, guys, it's not like you're going out and buying a car and getting a $20,000, $30,000, $50,000 car loan. You're getting a $200,000, $300,000, $400,000, $500,000 house loan from the bank. You're borrowing money from the bank. They need to cross their T's and dot their I's to make sure everything's going well.
Yep. Yeah. And just to touch on that too, because we did talk about it a little bit before, and I know that you used to work at a car dealership, is a lot of people will come to me frantic, right? Because they wait to get pre-approved for the last minute, right? You're showing them great properties or you're sending them stuff online and they go, oh my gosh, this is the one, this is the house, right? And as you can probably touch on, this market is crazy hot. Homes are going, you know, the same day or within hours if they're priced correctly. And I have people come into me frantic, like, oh my gosh, we found the perfect house, so we want to get pre-approved. I say, great. You know, my thing is I can work as fast as my clients can. So as long as you can get me all the documents I need as soon as possible, I can get you a pre-approval. But people don't realize that getting an auto loan and getting a mortgage, they're two separate things. Because when you get an auto loan, you go, hey, I make, you know, $5,000 a month. They pull your credit and they say, great, here's your payment. We shopped it with 5 different, you know, credit unions. Here's what your payment's going to be. Which one do you want to go with? A 5-year, 7-year, you know, I mean, it's very simple, and you buy the car on the lot. Here it's okay. Well, you know, depending on the loan, you know, I might need 2 years of documentation, taxes, W-2s, pay stubs, pulling credit, you know, 2 months of bank statements, things that people go, whoa, 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 whoa. You know, why do you need all this? So it's a lot more than people think. So, you know, if they come into me frantic and they're like, oh, well, my tax returns are in storage and in a box and I can't get those. Well, you know, it's going to be tough for me to really pre-approve you without full documentation. So that's a big misconception is, oh, I got an auto loan. I just told them how much I made. I can get a mortgage. No problem. Hey, Aldo, let's go make an offer on this house today because we love it. Okay. Yeah. So, hey, big shout out to Justin over in the New England area. Great guy. If you ever need a realtor over there, nice. Great realtor. But so, you know, onto that point is, you know, people are, that's why it's so important for people to get pre-approved prior to looking at homes, because I'm sure I have been in a situation where we found the home and I've been telling them, you got to get pre-approved. And they go and they finally get pre-approved once they find the house, and we miss out on it because, you know, most people who are buying homes are couples, and not only do you have to get one person's documents, you're going to have to get the other person's documents. Right. That's a good point. And life happens. You're working, you got kids, you forget, oh, I need this one tomorrow, but you go to work. And so that's why it's so important to get pre-approved. So how long does a pre-approval actually last? If I went in today and I got pre-approved from you, how long does that pre-approval last? That's a great question, because a lot of people want to wait till the last minute because they think, you know, oh, this pre-approval is good for, you know, a week. So the pre-approval is going to be good for 120 days, which is 4 months. So I always tell people, you know, the biggest pushback for me is people don't want me to pull their credit because they think that it harms it. Right. So they always say, oh, well, I don't want you to pull my credit yet. We're going to look until we find the perfect house. Then you can pull my credit. Well, then if we have some credit issues that we need to work on, or they didn't know they had a late payment from a Macy's card and we need to work on that, sometimes that can take 30 days to, you know, re-report on the credit report. So, you know, it's good for 4 months. So I always tell people, hey, if you're going to buy a house in the next 4 months, I recommend we do a full pre-approval process. I might need to update some documentation down the road, you know, maybe get another pay stub or something, but at least they'll go through the process with me where they will know, here's what your monthly payment will be. Here's what you're qualified to. You know, we have your credit pulled. There's no issues. And you have 120 days to find a home. So it really is a lot longer than people think. So it is super, super important to get pre-approved before you're looking at houses or getting in a realtor's car and going and looking at houses, because those houses will be gone pretty quickly if they're priced correctly. So, and you know, it's just great points because people, I think this is my strong belief in finding a home when it comes to lending and meeting with a realtor. Guys, we would love to help you, everybody out, but you know, people are watching right now, you know, they'll have a family friend, a lender, or a realtor, but if you're thinking, so it's almost the end of February, if you're thinking of buying in April and May, you need to meet with your realtor or myself and your lender or Dylan and come in with a plan, because the market is very, very active and things are selling within 2-3 days. And I know you hear it over and over, but come up with the plan. There's ways that we can get you looking better and stronger when it comes to you know, making an offer so you're ready to go. It's not like you're rushing and trying to, you know, stuff 4 kids into a car right away. So I got a question here from Sonia, actually. She says, what if you have excellent credit, but your husband is Canadian and he has excellent credit, but it's in Canada? Have you ever dealt with something like that? Yeah. So, I mean, the biggest guidelines, and I don't want to get into too many specific situations because it will depend. And there's, you know, like I said, a lot of disclosure stuff. But typically with Canadian income, what we need is we need U.S. credit. We're going to need that the foreign income earned reported on 2 years of tax returns, U.S. tax returns, not Canadian tax returns. And so those are the big pieces that, you know, and so, yeah, we need the credit in U.S. credit because we pull a U.S. credit report. And then we're going to need that foreign income earned, even if it's Canadian income, it's foreign income earned. And we need that reported on a U.S. tax return because we can't use a Canadian tax return. So those are kind of the two big pieces that I see that, you know, criteria that people won't meet. And if you don't have those things, you can retroactively file that foreign income earned on those tax returns, get a small credit card or something, get some U.S. credit established. So hopefully that answers it, but definitely you can message us later on.
Yeah, I think that was probably a brief one, Sonia, but give me some likes if that made a little bit of sense. And, you know, we can go into deeper detail about that here later on. Well, you know, that's good to hear that, you know, you want to get pre-approved. You want to do all that. You know, buying a house is not like buying a car. You know, it takes a lot more time and it's a little bit more of a process, but understand that Dylan and I are here to alleviate. It's stressful, right? Buying a house is stressful.
It's emotional. It's stressful.
But, you know, we're here to take that away from you guys and to really help you through the process and to really get you to what your goals are and get you into a house that you really, really like. I think that's pretty much all the questions that I have for right now. You know, is there anything else you wanted to add on, Dylan?
No, I mean, I think that was great. I think, you know, there's a lot more misconceptions that we could tap into. You know, we could talk for hours and hours, but I think we really hit the main ones on the head. You know, it really is the down payment, the credit, you know, getting pre-approved before you're looking at homes, really knowing what you're qualified to. And then I'll just touch on, I know you had asked me yesterday, you know, Dylan, what are your hours? Right. Because I mean, me and you, we send texts back and forth at 10 p.m. You know, that's I do that. So every client has my personal cell phone number. But you know, I do have a family. You know, I do have some sort of restrictions. You have to, as I'm sure you do. But everyone has my cell phone number. That's when people are really thinking of those questions, right? They're laying in bed like, oh, you know, do I need to give Dylan that extra pay stub or what do I need to do here? So I'm totally happy to get those texts at 10 p.m. If I'm sleeping, I'll respond the next day. And I try to respond as quickly as possible. And I know people traditionally will work that 9 to 5. So I know my hours cannot be 9 to 5 as well, because that doesn't leave any room to work with them. I know I met with you, on the weekends, we would text all the time. I mean, that's just what I do. I have to be flexible. With that being said, there's some constraints, but, yeah, so those are kind of my hours. And, you know, I have a lot of good information on my website, which we can put in the comment, but it's just dylanlange.com. My first and last name. I have a lot of good blog posts, testimonials, reviews from past clients. So yeah, that's kind of my last little pitch in there.
Awesome.
But yeah,
awesome. No, that's good to hear. You know, I just when it comes to hours in our industry, you know, there's a lot of great banks out there, and Dylan works for a pretty big one. I want to say lending. You know, they're really big in lending, but you'll also have great banks like WeQ, ICU. You know, that are more brick and mortar that will be 9 to 5. The nice thing, and I'm not saying that anything wrong with that, because I'm working with a great lender right now with Kristen at WeQ with one of my clients. And, you know, she's a great lender. The thing is, I think that puts some banks, you know, above others is that they're there for you on the weekends. They're there for you on the weeknights. Their schedule is like a realtor, where we're kind of, you know, with my girlfriend, she's nudging me like, why are you on the phone? It's 10 p.m. It's like,
right.
I'm sorry.
I get that. Yeah.
But, you know, I applied, and, you know, I'll just give you a little bit of, you know, kudos to you. Is I applied. It was 9:30 at night, and, you know,
on a Friday.
On a Friday. I decided I wanted to buy a house, and I said I'm gonna apply 9:30. Never even told Dylan. 5 minutes later, literally 5 minutes later, texted me and said, "Are you really trying to buy a house?" And you know, I was like, yeah, absolutely. So you know, it's I'm glad, Jeff. I'm glad that you are learning a lot. Any questions, guys? Feel free. We both have Facebook business pages. Like them. Send us a message. My phone is blasted everywhere on social media, so it doesn't matter if you call me, text me. It doesn't matter if you're trying to buy a house in a year from now, tomorrow, 3 years from now. if there's questions, the internet is such a great place, but it can be so broad. So make sure it's kind of Whatcom County related. But hey, Dylan, I appreciate your time, buddy. Thanks for meeting me here on Saturday. And we got to do this again. I think a lot of people enjoyed it, and we had pretty good questions here asked.
Yeah, this is great. Yeah, we got to make sure our Bluetooths are off so they're not connected to our car next time. But yeah, thank you so much for having me. Like I said, I think this is a great topic, misconceptions in getting a mortgage. I mean, I hear them all the time, and I hadn't really thought about them or put notes to paper until you brought it up to me, just a few days ago. So I think it was awesome. I really appreciate, you having me, and yeah, we'll definitely do it again.
Yeah, I appreciate it. Hey, thanks everyone who viewed this live. I appreciate it. I will save it and I will upload it onto my page so you guys can go back and look at it and, visit it again if you have any questions. But yeah, we're here to help you guys. We're here to serve you. So I hope you all have a great snowy Saturday. Hopefully it goes away soon.
Yeah.
And we'll all talk soon. Thanks a lot,
Awesome.
Dylan.
Thanks, Aldo.
Awesome. See ya.
Yep.